Hello. This is Finsights. My name is Justin. Uh, this is my plant behind me, and um, this is our vlog we're going to be starting. We're going to have general market commentary. We're going to go over basic technical analysis. We're going to have educational videos. We're going to go over stocks and ETFs that might look good for trading and swing trading. And yeah, so about FinSights, we are just a group that back in 2014 and 15, we just started a group chat and started talking about the market every single day and came up with some really interesting trading strategies and stock lists. And uh, for the most part, it's been pretty successful. One of the reasons we want to move towards a subscription service is we feel like we have a lot of value to offer, but it wasn't really getting out there. So with a subscription service, we can be a little more directed and uh, effective with what we're providing rather than just your Facebook post every now and then and really just getting lost in the grand scheme of things. So this is meant to help educate and build your confidence. We'll also have a podcast. We'll be going over things like trading psychology, how to not fall into those common traps that people fall in. Let's say you've got like a strategy that's working and then it stops working for a month and then you give up on it. Those are the things we want to help solve. And a few of our core beliefs are we really double down on technical analysis. We don't ignore the fundamentals, but a few of the reasons we believe it is important to stick with technical analysis is because it's based on supply and demand. Price moves up as demand is greater, and price moves down as supply is greater than demand. And when there's economic information and other information that's affecting prices that's often vague, late, misplaced, prices are always readily available and they're always accurate. The price is what it is. There's no fudging a price, if you will. Um, so um, one of the I'll just go over the list of things that we believe price is determined by the interaction of supply and demand. Price discounts all information related to the security we're looking at and all human behaviors involved. So it's not just who can find this news before someone else. As soon as someone finds that news and acts on it, it's already reflected in the price. So instead of competing and trying to get that news before these other companies that have multi millions and billions of dollars in research data, we're just going to do what we can as retail investors and follow the price because we don't have access to that kind of information. So we're going to play to our advantage. Um, Prices are non-random. Like I said, when someone finds out news that the company's going to have a lawsuit or whatever, they're going to act on it, and so the price is going to reflect that immediately. So prices don't just move up and down for no reason. There's either a human element to it or there's some kind of tangible news like a lawsuit or earnings reports or something like that. And then another thing that technical analysts believe is history repeats itself because humans will have similar behavior than they had in past circumstances. So there's a quote, by Mark Twain: "History rhymes, it does not repeat." So a lot of things that has happened in the past can be similar in the future as far as price behavior goes. Um, and then lastly, um, just a quote that really ties into our belief is every day the collective brilliance and breadth of the market battles for position. Buyers leap in, sellers bail out, rather than choose which side we think is correct, both of which have far greater knowledge and access to information than we do, we'll stand back, observe the trends, and identify the sectors and stocks for which the bulls appear to be winning, and then we'll act on that. And that, I think that just sums up everything that we want to be looking at. So without further ado, we can look at our first chart here. That's pretty much going to be how these commentaries are going to go. I'm going to pull up a chart list. I'll go down the list from the S&P daily, the weekly chart, and then we'll go over some commodities and then some possible stocks that we come up with our scans, and we'll cover those. So I've got the S&P 500 daily chart up, and what we're looking at here, if you never looked at a chart before, this might seem overwhelming, but I'm going to try and walk you through it, whether you are experienced technical analyst or not, and we'll just go from there. And hopefully, some videos in the future will help with that. And so here we go. All right. So the first things first, understanding that each of these little bars here. Each little bar here, so this red bar, this black bar, each one of these is a day in the market. When the market goes up, it's going to show us white or black and from the previous day, and when the market goes down, it's obviously going to be red. So we can kind of see how the price has been operating since September 2019 on this chart. And one of the things I like to do is I try and keep things very basic. I show signs of support and low risk with blue highlights and signs of higher risk with red highlights. And it's that simple. These blue lines here show trends. If you're unfamiliar with trend lines, it is your support and resistance areas, or if you're talking about economics, it's your supply and demand areas. So excess supply is going to be your resistance. So right here, I'll go ahead and point that out with an arrow. These are oversupply, if you will, where price has stopped because supply was too great. It was higher than demand. And if we look at the bottom here, this is where your demand picked up, or your support. So that is the basic premise of trend lines. Trend lines can be positive, like these. These are going up, so these are positive trend lines. And then negative trend lines would be something like this. So we can see here we've got top here, top here, top here, and then bottom, bottom, bottom. And that's just the easiest way to kind of gauge your risk in the market. Now, it does not mean they're 100% accurate. It does not even mean that price is going to hit that exact point. But we can see this point here, here, and here, price has been very close to the actual trend line. And if we extend this trend line back to December 2018, we can kind of see it touch this little top here, but this is, again, your area of demand. And then area demand, area demand. And so that's kind of how we want to look at things. And then now that we understand that, we'll look at the indicators. So this is a stochastics indicator. This, I mean, if you already know, then you can skip ahead, do what you need to. But so the blue here, like I said, this is area of low risk, area of high risk, and obviously that's inverse if you're shorting. But when we talk about risk in this vlog, it's all going to be long positions only. And so red is going to be high risk, blue is going to be low risk. And our goal here is to wait until our indicator drops below 20 in the stochastics, and that is where our lower risk is going to be. So what we want to do is actually match that up. So we have low risk here, and then our support here, and we want to match that up. And usually that's going to give us the best result for a swing trade. And you can see if you picked it up right there, I mean, you could have sold out whenever. I probably would have sold out here. But if you just bought there and held. I mean, you're up uh, just in the S&P 500, you're up about 18% on that trade. So you can see the merit to it. And the next indicator is the MACD. I use this indicator just to look at what are called divergences. And before I lose you on that, I'm not going to go into too much depth, but just know a divergence, for example, this is a negative divergence. Price has gone higher than the previous high, but the indicator has a lower high. So that is a negative divergence. And that's the general idea of what to look for. If we look here, higher low, and also a higher low on the price, that is not a divergence in any way. So this tells me that the trend is continuing. It is not false. So those are just some of the things I look at, but we don't really need to worry too much about that. Just know that that's just a nice little supplement to the main indicators, which is your risk indicator essentially of the stochastics, matching it with support and resistance. And that's all we really want to do. So as we're looking at the S&P daily chart, we can see that, let me clean this up a bit. We can see that we are overextended past the 50-day moving average. The 50-day moving average is a pretty common metric for support and resistance also. You can see here where it bounced off the 50-day, but it's not nearly as reliable as the 200. You can see it bounced off here, here, and here before. So the 200-day is definitely more prominent than the 50, but it is worth looking at because we're so overextended. So we're about 4%, maybe 3.5% off the 50 right now, but we are 10% off the 200-day. And if we look back, rarely do we stay above 10% above the 200-day. So there is bound to be some kind of pullback, not necessarily a crash, but the higher we get, the more it's going to trend the other way when it does finally break. So we look before here, we got 6% here off the 200. We got 6% here, 8%. So we can see that it doesn't stay that extended for very long before it comes back down. So right now, I would label this as kind of a high risk trade. We're a little past this resistance mark here. Again, that's excess supply. So we did push past that, but based on our indicator here, it's high risk, and how far we're overextended past the trend line, I would say it's a high risk entry. So if you want to take the risk and try and go on the inverse side and short it, that's on you. But for the purpose of this vlog, we're always going to look on the long side and try and figure out where we can go long in the market. Okay, so that's the daily chart. So right now, the first pullback is looking at in the S&P 500, it's going to be around the 3250 range to 3300 range. That's going to be the first level. If that breaks, we're looking at the 3100 range, somewhere around there, depending on where the 200 ends up. So that's that chart, and I'm going to go ahead and move on to the weekly. And again, everything's very similar. So the weekly chart is the only difference is it's a longer time frame, and each of these little bars here represents 1 week instead of 1 day. And the weekly chart is much more prominent than the daily chart. So I like to look at this chart for the bigger moves and look for more opportunity on the weekly chart because you can, obviously it's a longer term, but Frank just messaged us in our group. Anyway, so as we're looking at the weekly chart, we're looking at kind of the same things. The only difference is I have a couple extra indicators here. We can see the MACD is overextended. There's no kind of divergence in it, but it's definitely overextended. the RSI is overextended and kind of coming back down, and we can see what happened last time that did that. We came here and had our correction there. That's not indicative that we're going to go into another correction. It's just, again, we're just analyzing risks. Like, we're looking to see if it's a good idea to go long here or not. And on the weekly time frame, we're looking weeks and months out on our swing trade. So right now, it is probably not a good idea. And then lastly, our stochastics indicator, which is my favorite when it comes to the weekly chart, because every time the S&P drops below 20 on the stochastics, we get a huge rebound. It is a very good low risk entry, and I'm just going to go ahead and highlight all these. So we got this here, drop below 20, and then we've got our support here to match with that. So we would have entered there. If we fast forward ahead, it dropped below 20 here. This is shortly after the election. Again, we're starting a new trend line here, but as long as we invest when it drops below 20, our risk is very limited. And the reason I say that is we didn't quite get below 20, but let's say we did invest right here. So if we come straight up, we would have been in right here, which it might seem like a bad trade, but we can add in extra money here, and we'll be break even within a month. So again, we're limiting risk. It's a lot better than, I mean, whatever you want to strategy you want to compare that to. I mean, let's say you're just investing off the trend line and you don't care what this says. Even if you invested here, I mean, you're still kind of limited on risk, but here it's the stochastics is above 50, so it's higher risk. You're technically on a trend line there at this point, but your stochastics is telling you there's still risk in this trade. So if we look ahead, like we can see, like, I mean, your potential profit is not nearly as high as it could have been, because we're going to look at the past high and sell out there. So you're looking at maybe a 6% gain. But what happens when you stay into that? I mean, you're looking at 20% right there. If you panic and sell out down here. So just a few things to keep in mind. What do we got here? All right, he'll be right back. All right. Hope I'm not running through this too quick, but I don't know if Jake, you want to chime in at all?
Yeah. I mean, I basically follow the same strategy, same technical analysis.
Yeah.
You just gotta have a plan and believe in it.
Yeah, I mean, we've been pretty much doing the same thing since 2015, and it's worked pretty well. The biggest issue is emotions, and like I said, like when you're looking at these charts, try to not get too overwhelmed at first. But you're just looking at risk, like this trade here. Your stochastics did drop down, but what is the MACD telling you? The MACD is still overbought. Are we going to enter this trade? I mean, maybe for a small percentage, but we'll probably be looking at the daily chart for that kind of trade. But if we're thinking longer term, like weeks to months, because we are on the weekly chart, this is not a good trade. When the MACD is at overbought, it's not a good trade. So that's all we're looking for. And the last thing I was going to go over today, because this is getting kind of long, is one of the trades that we're actually in right now is oil. So for commodities, I like to stay on the weekly chart. They're usually a longer term trade, a weekly kind of trade for me. Right now, we've got the trend is verified by the MACD. There's no kind of divergence going on. Same with the RSI. The RSI is below 50, which is a lower risk entry. The MACD is below 0, which is lower risk. And if we look at our stochastics indicator, it's down to 8.99, which is phenomenal for you know anything except leverage stock. You can't look at a leverage stock chart and do the same kind of analysis. But when you're talking about commodities or um, treasury bonds or the general market, most of the time a weekly chart that has the stochastics below 20 is going to be profitable on a swing trade. And what we're going to look for right now, because we are long in oil, is we want to go to the next resistance point, which is going to be our 200-week moving average. That's about 10% from this bottom here. So if you're using something like options or oil U, which is a leveraged ETF, you can really compound your gain here by just making this short swing trade here. I'm not sure if you can see that, but you know, if you compound that with leverage, that 10% gain turns into 20, 30%. And if we just do that 2 or 3 times a year, and as long as we're patient, we don't make any stupid trades throughout the year, which I know is the hard part. Uh, I mean, we're gonna make 20 to 30% a year easily. I mean, just stick to the strategy, and one way you can do that is just by following us. We'll point out these trades just like oil, and if you want to follow along with us, that would be great. Um, and the way we're going to start doing this is, stocks that we find interesting. I'll go ahead and show one more. Um, it is a little past the entry point, but what we'll do in the Patreon is we'll actually cover individual stocks and we'll cover commodities or even whole index funds that look good based on this stochastics here. And we have an algorithm that kind of shows us what looks good, what doesn't, and we kind of screen that for you so you don't have to do all that research. And so right here we have Chevron. It kind of matches up with oil, um, but Chevron is on the 200-week moving average. It's actually just bouncing off, and the stochastics is below 20. This is exactly what we're looking for. The MACD is below zero and kind of rounding back up. RSI has already dropped and is now rounding back up. So everything looks good on this chart, and this is what we're looking for. So uh, this is the kind of stuff you're going to find on Patreon. And obviously, if you're new to the technical analysis, this might seem overwhelming at first. But we're going to also have educational videos on there. We're going to have podcasts. We're going to have uh, blogs that kind of describe, we're going to go from what kind of account do I trade with all the way to some of the more advanced strategies that we use. So I hope this video was informative and yeah, happy President's Day. It's February 17th, 2020. Got my plant here. Try to make it look a little nicer in here before I did this video. Got my friend Jake on the line uh, with the limited commentary, but
It'll get better.
yeah, we'll get better. This is just I wouldn't say quick video, but it's a video. We just wanted to get something out there so you can kind of get the idea of how we're functioning here. And like I said, we're long oil, and the market looks a little heated. Um, that's your overview. And as far as the educational stuff, that's just going to take time, and that's one of the reasons we also want to do the Patreon. Is it is a lot of work to go over this stuff and actually go into depth. Um, I know I just kind of touched on everything really briefly, but definitely when we get that going, definitely subscribe, and it's going to be tier based. So the first 50 people, it's going to be $10 a month, so it's going to be super super affordable. Uh, and the way it is, the first 50 it's $10, the second 50 it's $20, and then 100 to 500 is going to be 30, and then anything over 500 is going to be 50. And I'm just going to cap it at 50 because if you're spending more than that, I mean, really, you have to make sure it's worth your time. And if you're trading in a small account, it may not be worth more than that. So we're going to do our best to bring you value and make you a better trader, and um, hopefully get better at these vlogs. This is a first for us. Usually we're more of the behind the scenes kind of crew, but this is a way that we're just trying to give back to the retail investor. I know we've had our little chat group for the last 5 years, and we've done pretty well. And it's just we're so passionate about it. We just wanted to create a subscription service. So yeah, just stay tuned, and we'll post the link when it's ready to go live, and hopefully we'll get weekly weekly vlogs, hopefully a bi-weekly podcast in there, and then educational videos and blogs. We'll still post on Facebook every now and then, but you're really going to find the meat and potatoes is going to be on the Patreon. And I know we've taken a lot of time off in this on this Facebook page, but we're back, and we're definitely going to make it for the retail investor, and hopefully get some people some winning trades. So uh, thanks for watching.